Hello everyone, it's Thursday. You know what that means, Africa Thrive Live. I'm so glad you could join us today. My name is Naomi Kirungu, your host of the African Management Institute. Please let us know on the comment section. I'd like to get to hear from you. Where are you tuned in from? We usually get guests from across the continent, so I'd like to know where you're tuned in from. And also, while you're at it, maybe you can just write to us and tell us who are you, what business do you do. The beauty about these sessions is we get to really know each other, and we get to tell you more about AMI and how we are supporting you. But at the same time, we want to know more about you and your business and how we can support you. So just write to us, tell us who are you, what business do you do, and where are you tuned in from. So I'm very excited to about the session today and for the guests that we have. This has been a conversation that we are sort of bringing on from last week. And before we get there and talk about financing and funding for SMEs, and I know you're eagerly awaiting for that, I want to introduce AMI to some of you who this is your first time interacting with us. Yeah. So as you write about yourself, let me introduce us to you. So African Management Institute, we exist to enable ambitious businesses from across the continent to thrive. And now during this period, we have a very simple mission. Our mission is to help as many SMEs as we can get through this crisis, survive this crisis. And for those, even as economic activities come back, as opportunities arise, because if there's one thing we know about SMEs and entrepreneurs in particular is how resilient we are. Yeah. So in as much as business may fail, we just get back on our feet and dust ourselves up and see opportunities again. So we are here to help you as you look for those opportunities, to equip you and your teams with the capacity and the skills you need to sort of build a successful business. So how we do that is through 5 main ways. I'll just quickly take you through them. So one is, like you will see on your screen shortly, is the AMI Business Survival Bootcamps. So these are free 2-week programs that we take, and we have two tracks for them. Tracks bootcamp, you get that, yeah? So think of a track as an option or a topic. So we have 2 topics. The first one that you could choose is the cash flow management and scenario planning topic. And here we take you through just thinking through your cash, which is very important now, how the best use of it and how to have more runway for it. And also scenario planning, which is a basic risk management tool just to help you think best case, middle case, worst case scenario in terms of next steps for your business. Yeah, so we've done that for a couple of weeks now. We've trained over 1,000 entrepreneurs already from, I think, 38 countries. So that has been happening, and you can still plug in for that 2-week free program. And then the next one is one that we launched this past week. We are really excited about it because it now speaks to us now what as we do business in this new normal. So we call it Reboot and Adapt Your Business in the New Normal. And here we look at topics like reaching new customers, adopting your products and business models because those have been disrupted. We look at planning to reopen in case you had to completely closed down. So we just help you do that. And again, it's a 2-week free program. Feel free to join that. Yeah. So the second thing we do is the Survive to Thrive program. So think of Survive to Thrive sort of like as an extension of the boot camps. So we cover more topics and we work with you for a period of 6 months. Yeah. And we look at more topics. So we look at how do you adopt your operations? How do you manage your teams? We look at planning and strategy more in depth. We look at your finances more in depth. We look at customer and markets, and we create a learning journey for you and your team, and we work with you for 6 months. So thanks to our partners, we'll be offering this program we'll be offering it as a free program. So we'll be opening up scholarships for it, thanks to our partners who have supported us to do so. So once we open those up, we'll let you know very, very soon. Yeah. And then the third, and one of my personal favorites, is Rise. So every single morning, It's a great way to start your day. We are privileged to have one of our co-founders who's a psychologist, so he was able to put on his psychologist hat, and he designed a meditation and reflection session bespoke to entrepreneurs. So it's quite exciting, and for 30 minutes, it's a great way to start your day, because we know as entrepreneurs we carry so much responsibility and a lot of responsibility with us, our teams, our families, trying to build a business. So it's a great way. Every morning we do it for 30 minutes, and you can access it on our mobile app. So it's a great way to start your day. So the fourth one, which is quite exciting as well, is our newsletter, weekly newsletter. So we have a team that sits and we collect resources from across the continent, relevant news, funding opportunities, basically anything that's out there for African enterprises. We collect it and we put it in a newsletter, and every single week we send this out. So it's something you can subscribe to and just see what's happening in different markets. And last but definitely not least, are these conversations that we have every single Thursday. We've had them for quite a while now, and they are conversations for entrepreneurs by entrepreneurs. So one, we take topics that you want us to talk about, and we sort of bring entrepreneurs or experts around field to tackle them. And we are here to network, we are here to learn, we are here to and we have them every Thursday at 12 noon. So they happen 12 noon East Africa time. So they happen at 12 noon East Africa time, or whatever time it is now. If you're watching this live wherever you are, they happen on Thursdays. So feel free to click. If you're watching on YouTube, subscribe. And if you're watching on Facebook, click on that button on your screen written notified when we go live. Yeah. So just click that button and we'll be able to be with you next Thursday. Yeah. So that's who we are. So I'd like to get to read. I know I've told you so much about us. I want to get to read from you. I see Patrick Kimenyi has joined us on Facebook. So Patrick, he's from Kigali, Rwanda, and he runs a travel agency and visa application assistance. And this has been on hold because of COVID-19. Patrick, we're here to support you. If it means starting a new business, if it means reimagining your business, we are here to, that's why we exist. I don't know if we have anyone else. We have Claire Becker. Thank you for joining on Facebook. She said she's from Africa Digital Media Foundation and she's listening from Nairobi. Thanks for hosting us, and thank you for Claire for joining, and all the rest who are there. I see Kevin Mutugi. He's logged in from the office. Thanks, Kevin. I'm logged in from my home office as well. And he's the co-founder and chief technical officer at Empire Prepaid. Yeah, we have your founder today. Thanks for supporting him. Thank you, Kevin, for joining. I guess keep your comments coming. I'd like to get to know more about you guys. And like I said, if you want to get to learn more about us, just go to africanmanagers.org. I know I mentioned so many things. Just go to africanmanagers.org/together and you'll be able to plug into any of the things that I mentioned today. Yeah. So for the past 2 weeks, this week included, we've been talking about, you guys told us we want to talk about financing and funding, what's existing out there, what support can we get. So we went back and sort of curated content for that. So we've been talking about financing and funding, and we thought we can't cover it in one section because financing is and funding is so broad. There's so much we can talk about. So what we did last week, we talked more about debt financing, and by that I mean more traditional debt financing, the sort of financing that's readily available for SMEs, more bank loans and stuff like that. So we had a team, different bankers from across the continent. They came and we learned so much. My personal takeaway was how banks are sort of demystifying what collateral means. They're giving more unsecured loans, so that was good to hear. And also the fact that one of the guests said something that I just took home was financing is not the solution for a bad business. Yeah, so if your model, if the fundamentals are wrong, a bank or financing is definitely not the solution. So in case you didn't watch the session, go back to our YouTube or Facebook and you'll be able to watch that. And we want to pick up that conversation today. And today I want us to talk about less traditional options of investment. And including equity investment. And I'd like to get to hear from you before we go into that. So please, on the comment section, just write, have you tried to raise financing for your business? Either raising investment capital or getting a bank loan. Just write to us, have you tried to raise investment for your business? Have you been successful in raising any sort of financing? Yeah, and if you haven't been successful in raising financing in whatever platforms you've tried to use, why do you think you haven't been successful? Or what questions do you have for the guests? So I know this conversation and the hour flies by so fast. So I'd like to get to hear your experience and we can speak to those experiences today. So continue writing to us, yeah? So to have this conversation, I wanted to invite my co-host, and I think she's the best person to host this conversation with because she has raised investment not once, guys, not once, but twice. So help me welcome Rebecca. And like I always say, because I'm not able to see you and we're not able to give a round of applause, there are so many emojis on your screen. So choose one and click them, and I'll take that to mean you're sort of appreciating the guest. So help me add Rebecca, our co-founder and CEO. Hi, Rebecca.
Hi, Naomi, and hi, everyone who's watching and listening. It's lovely to be here. I'm feeling the love, even if I can't hear it. Oh, I'm not sure if I've frozen.
Yeah. Or if it's great to.
Sorry, just a technical glitch there.
Yeah, I don't know if it's me or you, but I can hear you perfectly now.
Great.
Yeah. So maybe, Rebecca, for those who haven't interacted with you, you could introduce yourself to us and also tell us a bit more about this topic today. And before, just introduce to us how you were able to raise money just overall.
Yeah, great. Thank you so much. So this is such a fascinating topic. And I think I said last week, I said, you know, as an entrepreneur, I'm sure you guys are the same. Thinking about money occupies a lot of my headspace and a lot of my time. So financing, I think, is really top of mind for entrepreneurs and businesses. And I can't believe the lineup of guests we've got today. It's really, we've got some of the best, the leading investors around the continent and from every corner of the continent. It's a really great lineup. So can't wait to talk to them. I guess I just wanted to introduce the topic by making clear the difference between debt and equity. So apologies to all of you very sophisticated entrepreneurs who already know this. But if you're like me, when I first started this journey, I really had to learn the basics. And so I think it's really clear to get in our heads clearly the difference between debt and equity. So last week we talked about debt and borrowing from the bank. When you borrow from the bank, I think most people know this, you have to pay it back, unfortunately. And normally you pay it back with interest. Sometimes you know there's collateral and there's terms around that. What's interesting about equity, and even some sorts of instruments somewhere between debt and equity that we might not get to talking about today, but if you're interested in raising finance, it's worth learning about those. What happens with equity is that you persuade an investor to buy shares in your business. So you're actually selling your business, part of your business, to someone. And it's really important to get that distinction right, because the beauty of equity is you don't pay it back, right? Or at least not immediately. Eventually they'll want a return. But you don't have to pay it back. So that gives you a huge amount of freedom if you're an early stage business where you just don't know when you're going to make money. There's a lot of risk. You're not going to be able to get a loan from the bank, but you might be able to persuade an investor that your business is so exciting, your idea is so transformational, and you've got this awesome team and a little bit of traction, and that they should take a bet on you. They should invest in you now because they believe that you're going to make money in the future. So that's the key difference. And we can talk more about what the implications of that are for entrepreneurs. There's some things that you really need to think about if you're going to take on equity. But let me pause there for now.
Yeah, thanks for that, Rebecca. And I just invite everyone, keep tell us about your experience and keep your questions coming. We'll try and really demystify what raising investment and raising financing actually means, and that's the purpose of this conversation. So allow me to introduce the guests. First, I'd like to introduce Olivier Furdelle. He is the co-founder and managing director of Teranga Capital, the first impact investment fund dedicated to early stage SMEs, that's good to hear, and startups in Senegal and Gambia. So please help me welcome, remember the emojis, Olivier. Thank you. Thank you for
Hello,
joining,
everyone.
Olivier. Please introduce yourself to us.
Sure, great. Thanks. First, thanks, Naomi. Thanks, Rebecca. Thanks, AMI, for inviting me. I'm so happy. I feel the energy already. I'm here in my office in Dakar, Senegal. So I think we're reaching many countries in Africa from west to east and north and south. So yes, I am both an entrepreneur and an investor. I have done actually both. Raised capital. It was very difficult for e-learning startup back in the early 2000 years. And I've raised also capital and started a few other companies. But most importantly, with respect to our discussion today, I have also, as an entrepreneur, as a co-founder of Teranga Capital, raised the so-called impact investment fund since 2016, so almost 5 years. And we indeed are dedicated to financing and helping SMEs and startups to grow in Senegal and in the Gambia. So that has been my bread and butter. It's been very fascinating, very exciting, and very challenging. And we see ourselves as both investors and entrepreneurs.
It's wonderful to have. Sorry, Naomi, just said it's wonderful to have a guest from Francophone Africa. I think you might be, Olivier, our first Francophone guest on Africa Thrive Live. I'm sorry that we're not doing it in French, but maybe we'll get there eventually.
No, that's very fine.
Yeah,
Sorry,
I like that.
No, absolutely.
Allow me to introduce our next guest, Sarah Ngamau. Sarah has over 10 years experience in private equity, and she's the managing director of Creadev International, an evergreen private equity firm. So she'll tell us, I've seen impact investment firm, I've seen evergreen private equity firm. So it's good. We're getting to learn different types of investment firms. So help me welcome Sarah, everybody. And Sarah, please introduce yourself to us.
Sarah.
Thank you, Naomi. Thank you, Rebecca, and thank you to AMI as well for organizing this session. As you heard, I'm Sarah Ngamau. It's actually 12 years now in private equity that I've been investing in entrepreneurs. As you heard, I'm with Creadev International, which is a family-backed investment fund. It's actually backed by a family of entrepreneurs who are sixth generation today. They've been investing, or rather, they've been building retail businesses for the last several decades. And some of you might recognize their brands in retail, like Decathlon, the sports accessory retail chain. They've been building this across 35 countries and have 200 companies actually altogether. And they grew by actually investing in entrepreneurs within the family. And they decided to then extend this concept beyond the family and beyond the retail segment. And this is how Creadev was born. We have today $1.7 billion invested in entrepreneurs across 4 continents. So we are in Paris, we're in France, we're in New York in the US, we're in Shanghai in China, and Nairobi is the Creadev Africa office where we've been investing for the last 3 years. We invest in innovative solutions that provide access to essential goods and services. And I'll probably talk a little bit more about that.
Yeah. Thank you for that. That's quite exciting. Last but definitely not least, Brienne Odhiambo. He's the investment director at Novastar Ventures. So help me welcome Brienne. Brienne, hello.
Hey.
Please introduce yourself. Tell us a bit more about Novastar Ventures and yourself.
Yeah, no worries. And I promise I will change my lighting too, so you can see me.
Okay.
So thanks, Naomi, and everyone else for inviting us to this. I'm Brian, currently in Lagos, actually, where Novastar has its second office. So our other office is in Nairobi as well. We've been investing for the last 6 years now, doing venture capital, investing in, again, innovative solutions, high capacity entrepreneurs who are really passionate about solving the mass market. And so that's kind of the lower income markets, and looking to really build businesses that can scale and not just be profitable, because we definitely care about that, but also really drive impact and change. So, we think that, by backing really smart people who are doing really great things, that's how we change the continent and how we drive change. We move forward.
Great.
So, yeah.
So great. So we have Lagos represented. We have Nairobi. We have Olivier, who's in West Francophone Africa. So Rebecca, would you like to take it away?
Wonderful. Thank you again, everyone, for joining. We try and squeeze a lot into this hour, so we're gonna dive right in with some questions. And we'd love, so those of you who are listening, please keep the questions coming. I'll try and make sure I keep an eye on that and ask our guests as well. So first of all, we've got a lot of people out there who are maybe just beginning their journey thinking about investments and maybe thinking about equity investment. I'd love to know, what do each of you and your funds look for when you think about putting money behind an entrepreneur, an idea, a concept, a business? What do you look for? So maybe, Sarah, we'll start with you. I know that Creadev is invests in businesses perhaps that are a little bit more mature than the other two. Tell us a bit about what you look for.
Yeah, so actually we come at the stage where we call it a late startup. So we look for a combination of a proof of concept and a scale engine. And for us, what we call a proof of concept is a product or a service that has already been proven and successfully distributed to customers. So basically, it's a product that customers are willing to buy into. And so that for us is what we call the proof of concept. In terms of revenues, we also want to see that you have a certain run rate. So we might probably come after Novastar has probably come in a little bit earlier, and it's the second kind of round of funding, and the business has a run rate of revenues of at least $1 million. So that's one. And then secondly, we look at a scale, what we call a scale engine, and Brian mentioned this a bit in his introduction of what they look for as Novastar. We want a business that is solving, that has a real solution to a real problem, and that this problem is big and bold. So the solution doesn't need to be for 3 people, for instance. It needs to be a solution that's a pain point for a lot of people. As you heard, we are looking at essential goods and services. So for us, and we say to the many, because we're looking at growing populations. In Africa, we're expecting to have at least 2 billion people in SSA by 2050. These people will need essential goods and services. And so we are looking at businesses that are addressing the problems of these people. And the scale engine for us means that the company has the right systems and people in place to become a potential champion. So maybe just one thing to end this with is, it's okay to run a business that is just an alternative to employment, but that's not a business that a private equity investor is looking for. That type of business would need a different kind of funding. We're looking at a business that is big and audacious and is solving real problems and is scalable across several different markets. And then passion in the entrepreneur. So we need a passionate and a visionary person who's running this business and who is committed. So I know we have, as Africans, a tendency to have several hustles. And so we don't want this to be one of your hustles. We want this to be your main hustle. And we want you to be fully committed towards growing this business and to building a team around you that can grow the business with you.
That's great. Thank you, Sarah. So if there's entrepreneurs out there with big, bold ideas and that already have a pretty well-established business, so at least $1 million in revenue, that's $1 million in US dollars, not Kenyan shillings or naira,
yes.
US dollars, then then go talk to Sarah. I think Sarah, you've really nailed an interesting point here. We were talking at the beginning just about the difference between debt and equity. And I think you've described it well, that it's not, so raising equity, investors are looking for something that's different and that can get big. So if you have a good, solid, profitable business, but you don't have ambitions to grow kind of beyond your kind of niche, I guess would that be better to go talk to a bank? Sarah, are you saying, is that more of a kind of bank type business, whereas you're looking for people doing something a bit different? Is that right?
Yeah, I think there can be several sources of finance. There can be banks, and I think you had a great session last week that talked about how, banks are also not as conventional as we always thought of them. They're thinking about collateral in different ways. There's microfinance institutions, there's SACCOs, there's friends and family as well. Don't disregard those. So those can also be sources of funding for your business. And the trick for an entrepreneur is to really identify what kind of business am I building, and really do your due diligence on what is the financing that's available there, and try to fit yourself, to match yourself to the right type of funding.
That's very helpful, thanks. Brian, so Sarah mentioned that sometimes Novastar might come in a little bit earlier in an entrepreneur's journey. Tell us what you look for in an entrepreneur.
Yeah, Sarah alluded to, they tend to join us a little bit further down the journey. So we typically will be looking at a lot of the same things as they would be, just coming in a little bit earlier and maybe taking a little bit of a risk there. So we again are looking for entrepreneurs who are looking to kind of break the mold in a significant way, or die trying. Let me put it that way, right? It's not, we're not necessarily going to be the people who will support a business that is looking to get profitability in kind of 3-4 years and steady state kind of grow organically, right? We typically will be the guys who, you want to build the next, I don't know, Uber, let's say, or Lyft maybe, or whatever. So that level of ambition are typically what we're looking for. That's not because we don't think other types of businesses are interesting or exciting. It's just because of the way our strategy as an investor, as a venture investor, venture capital just requires that we back those types of businesses, so that our business model, because we are also a business and we have a model, that our business model works. So that's kind of in terms of the ambition and profile of entrepreneur. Again, all eggs in the same basket, as well as Sarah alluded to. I think we are probably willing to come in a little bit earlier, so you don't have to be profitable. We've invested in companies that don't have revenues at all. We've invested in a business plan once.
What were you looking for there? If they didn't even have revenue, what made you think that they were going to build the next Uber?
The entrepreneurs. So a lot of our early on for us, a lot of our decisions will be made based on our assessment of teams, right? And so, and I use the word teams intentionally and not founder, because the entrepreneurship, at least for the types of businesses we're trying to build, is a long and hard journey, and typically you need partners and people around you who can support you and challenge you and help build the business with you together. And so even if that doesn't necessarily mean having a co-founder, someone who started the business with you, but will typically require that if you're a single founder, you have people in the senior team, or even people you hire who are senior enough that you take them seriously. So they're not just another employee who you will tell to do this and they will kind of not ask you why. So teams, we will look at the market, make sure it's a big market. It's a problem that is kind of ubiquitous or close to that, so it's scalable. And then, look at your solution and say, do we think that this is defensible and that you guys have the capacity to execute on it? At that scale, just to wrap up, I think at that scale, we probably wouldn't be writing a $3 million check. Obviously, at that earlier stage, we will go small and do something sub $1 million maybe, and we can be looking from 200 to to 10 million and over multiple rounds. But then as you grow and continue to develop as a business, we will come in again and again and continue to support.
Great. It's really interesting. So I think it's useful to note that, oh, sorry, Brian, that both Novastar and Creadev are looking at what's called venture capital. So I'm sure lots of you have heard that term. And you get a clue from the word venture. It sounds a bit like adventure, doesn't it? It's like high risk, it's exciting, you're going to change the world, you're going to create the next Uber. And what's really interesting is that difference in stage. So Brian will look at you if you haven't even made any money, but you're really convincing. You and your team and your idea is really convincing. Sarah wants to come in a little bit later on once you've really already built a good solid business and now you're ready to conquer the world. Olivier, tell us, so Teranga Capital is a little bit different, both in the size of, I think in the size of investments and the things that, maybe the types of business that you look for. Tell us, what do you look for in an SME entrepreneur?
Yes, indeed. I think I can recognize myself in many of the things that Sarah and Brian have mentioned. But in kind of even maybe like a more upstream way or earlier way, in the sense that, yes, we are an early stage impact investment firm. We do invest, however, and there's nuance in that between 50K USD equivalent 50 and 500, $500,000. So you can see that there's a segmentation, so to speak. And for that, as we have a hybrid way of looking at, let's say, what we call investment strategy. What we look for is that, yes, we do also wish to support high-growing, highly ambitious venture type of companies, but we also do finance through equity more traditional SMEs across different sectors. It could be agribusiness, could be education, other services. And those companies obviously might not be the next Uber, Facebook, Airbnb, and so forth, but they will be extremely ambitious in a certain way. They will have potential to grow, to scale, and share actually many of the same characteristics. So clearly what we look for at our stage is first and foremost the entrepreneur. And I'm not even talking about the team, because the team is probably a projection at that stage. Probably it's a lady or a man, could be family businesses. If I look at take the example of the traditional agribusiness companies, and we found that we financed a few of them within our, let's say, 20 company portfolio to date. And so we have to look at good entrepreneurs, obviously very committed, very involved, knowing what they're talking about, the craft. However, at that stage, we fully understand that the team is not full, that all competencies are not there. And part of what we do, actually, when we say that we support them, is that we roll up our sleeves and we try to help them go through the journey of the required competencies in their journey to grow and to scale. So clearly, very good entrepreneurs. I would also add ethical entrepreneurs, transparent, willing to share somehow a part of the decision, to run the business in a more formal way. And we have to recognize that, and especially in West Africa, where we operate, most of the companies at the time that they come to us are not formal, i.e. they do not pay their taxes, they do not have like the provide the right or the best type of, let's say, contracts to their workforce or colleagues and so forth. So we try to embark them on a journey, a vision to do that. That's why we are an impact investor as well. But there has to be some. So we would really, quote unquote, bet on the entrepreneurs at that stage, even more so than at the later stage. There has to be a good idea, obviously, and that has been mentioned. So obviously, you have to answer real needs of today and tomorrow, probably solving problems, pain points, as we say, for customers, also in very traditional sectors, and differentiate yourself. Obviously, being just a me too, we have, like, I take an example, people who come in poultry farming, transformation, say, okay, I'll be the next KFC. Okay, yes, but why do you want to do that? Well, just to compete on prices. What will we do? Marketing, branding, communication, go to market, and so forth are important. So that is important. It has to be, of course, have the potential to grow and to become profitable at some point in time, which also means that we do not, when the companies come to us, they're not profitable yet. And the last thing, and that probably differs among the instruments, the way that we finance companies. So we finance them through equity if they have already started concretely. So which we believe is very important. So if they have an initial quote-unquote proof of concept, and proof of concept will not have the same definition as in the case of Creadev, as Sarah pointed out. In our case, it's get started with something, have early revenue, but maybe a few, thousands or tens of thousands of dollars, but having done something for the last and gaining what we call traction, meaning evolution of what you're doing, first customers or pilot project to stack it from alpha to beta, pilot, trial customers, seeing the engagement of your customers, even if they're not fully paying yet. That is important also for us if we wish to invest in equity. If not, we do have some quote-unquote soft loans. So we have donor-based financing, which help us really support a company at the ID stage, which is, let's be very honest, very difficult for any equity investor, in any circumstances. So that is what we're trying to do.
That's wonderful, Olivier. Thank you so much. And it's interesting, Olivier, so Teranga Capital is actually, it's part of a network of funds that have a similar mandate around Africa, all related to Investisseurs Partenaires. So if anyone's interested, isn't in Senegal or Gambia, but thinks that where Olivier is focusing might be a good match for them, you can have a look at some of the other funds in that network. This is great. Naomi, please interrupt me if we're running out of time. Can I squeeze in one more quick question? Or do you want to?
Maybe you can do that, and then we have a few questions that have come in. So just do that, and then I'll answer. Yeah.
Okay, just a really quick one. I'd like to ask this to all of you actually as well, is what advice would you give an entrepreneur who's maybe just starting out on this journey thinking about equity? If we could be really short and quick, like one piece of advice, what would you give them if they're thinking about maybe raising equity investment? Who wants to go first? Brian, you've unmuted. Why don't you go first?
Yeah, sure. I think, the first thing I would think about is, and this is really because I've raised equity in the past as well, as an entrepreneur. Do I really need equity? Is that the right thing for me? Right? Because I know, Rebecca, you kind of mentioned that you don't have to pay it back immediately, but it's not that straightforward.
Do eventually, yeah.
It actually may be more expensive than other instruments than you think, especially if your business actually does do well and you don't have the right partner. If in a way, let's put it this way: if you borrow money from a bank and you pay it back and the interest rate is like 10, 12% or 13%, that's going to be the price that you pay for that money for however long it takes, right? But you build your business and the value doubles every year. So your revenue is doubling every year. So let's say the value of your business is doubling every year. If you sell equity, then basically the premium that the investor is getting is 2 times that value. And so when that investor claims back their investment and they exit by selling the equity, you pay back way more than you would have paid, say, if you borrowed money. But
that's a great point.
It can be a great instrument for getting you the right partners. For me, I think of equity as a partnership and bringing in partners into the business, and partners who are just more than money, who can actually you build a business, so they're doing work as well.
It's a great point. If we have more time, I'd dig into that, because Olivier was sharing all sorts of examples as well of how investors support a business. It's a really good point, Brian, that you can end up paying back so much more. On the other hand, if the investment allows you to double your revenue every year, you end up with a bigger pie, even if you're giving away more. So I'll talk about it later, but that was my decision, when we sought investment, was we just thought we wouldn't be able to grow at the rate we needed to if we didn't seek investment. Sarah, just quickly give us one piece of advice for someone thinking about equity.
Yeah, I just in the same lines, a bit same as Brian. I would say do your homework on the equity parties that you want to partner with, because as you said, it's a partnership. We almost actually we draw the correlation to marriage. We say, you're coming in, you're taking somebody in as a partner, that you're growing something together. They're coming in as a shareholder. So other than the fact that they want great returns, they also will have value creation initiatives in the company. They will sit on your board, for instance. So you have to have a good chemistry with them from the very beginning. And so it means that you need to do your homework and make sure that the partner that you're getting is a partner that will meet the needs that you need as an entrepreneur and as a company, and that they have the value creation abilities. Do they have the networks? Do they have ability to take you to markets? So really do your due diligence as well. So the investor does due diligence on you, but do your due diligence as well.
That's great. Thank you, Sarah. Olivier, one piece of advice.
Yes, well, I would probably also say that the entrepreneurs, a piece of advice is for them to also do their homework really well on their own business, because investors have, and especially in the technology area, have a large and growing number of comparison points. So you really need to know, for instance, what's your market and who's your competition. And next to that, with respect then to engaging with investors, my advice would be to start engaging with them actually early on, before you are willing effectively or you need to raise capital or equity capital. Go and talk to them, present yourself to them, engage, show your progress, understand what they're looking for, what would make this fit good, both in terms of, are you eligible to their criteria, but also would there be a good fit?
That's a great point. So even if you're not ready for any of these types of investors, it's worth starting to begin that conversation. And of course, back to Naomi, your point earlier about before you even think about finance, first of all, make sure you have a great business, which is a great link back to that. Thank you so much. Naomi, over to you.
Yeah, so we have a few comments and questions coming up, and a lot of people are saying I see Prashna is saying they've tried to approach banks. I think what's most accessible to SMEs, or what most SMEs are aware about, are only bank loans, and a lot of them are saying, so there's Prashna, I've tried to approach a bank. A lot of people are saying, I tried to approach a bank for finance, that's Josephine on Facebook. Maybe I could ask this question. Is it, so if I am an SME and I have been told no by a bank, is there any chance that a venture capital out there, investment firm out there, has a chance of telling me yes? Should I pursue that? Maybe anyone can take it.
Definitely, I think as we said, if your business meets those criteria we mentioned before, there's absolutely no reason why you shouldn't be approaching investors. And like I said, sometimes this search for an investor it's a search for a partner, so it might not be as easy to find them, but don't give up. Look for, one entrepreneur who said this publicly is the CEO of Cellulant, who raised, I think, almost $47 million a couple of years ago. And he said he met 400 investors before he found the group of investors that then put $47 million into his company. But yeah, so it means that there is somebody out there who could match what it is you're looking for. It's just about finding the right match and being, if you've met the criteria that we mentioned, you have a big vision, a big audacious vision, then there's no reason why you shouldn't be out there speaking to investors.
Yeah. And keep your comments coming, everyone. And I think because we are running out of time, and I know this conversation about finance, we're not able to answer all these questions, but keep them coming. We still have a few minutes and a few more guests to add. And maybe what we could do is you guys could give us your sort of closing remarks, and the question will keep coming. And if there's any that's addressed to you individually, I'll find a way of channeling that through. So maybe you could give us your closing remarks, Olivier. Anything you wanted to say? Yeah.
I think that's the back to some of the comments that have been made. I think, and especially again in the tech sector, there is a hype growing, from actually all sides, all parts of the ecosystem, that makes entrepreneurs, even like traditional entrepreneurs, willing to raise, VC funding, venture capital funding, because it's status, it's a badge of honor. It's of course very difficult, highly selective. So back to Brian's point, I think that entrepreneurs or aspiring entrepreneurs, as Rebecca said, need really to have their reflection and deep thinking into, okay, what are they trying to build, what type of business are they trying to build, and try and see what the adequate financing could be. And surely private equity or venture capital or equity financing broadly might be a way to answer those needs, as is the case for AMI, for instance, as Rebecca highlighted, but it's not for every company. We see companies, across, down the streets. We have really good, businesses. It's going to be profitable. It's going to be a great lifestyle business for them and their families, and they're going to become rich and even have an impact because they're going to employ others and provide them with better conditions, or strengthen the value chains, like helping local producers if they work in cosmetics, as we have a few companies, and so forth. So, and there's no shame in that. So first, don't get into the hype. However, if you wish to pursue that road, which is obviously very fine, I think one of the critical points at the beginning of your journey, in order not to be discouraged by, let's say, an investor which might say to you, okay, beyond or below $1 million equivalent, I'm not able to finance you, and then there's this gap because you're just at the starting. Then go also to meet other non-financial, I would say, actors like business incubators, accelerators, other type of providers, which we haven't had time to discuss, but which are extremely connected both to the entrepreneurs, obviously, but also to the investors landscape, the emerging, I would say, investors landscape in countries and geographical areas such as East and West Africa, even more so in East Africa. And I think these are also important on the path to entrepreneurship. So entrepreneurship is not solely about financing, it's not solely about equity financing. It's more about the journey and how to make it one step at a time.
Yeah. Thank you for that, Olivier, and thanks for taking time. Brian?
Yeah. For me, I think, look, once you decide on what, let's say equity, once you decide on equity, because that's what we've been talking about a lot today, just realize that equity is not the same, right? It's even within equity, there's a whole wide spectrum of things there. And you just need to really talk to people and do some research and really understand what type of equity makes most sense for your business. So I guess if there's anything there, it's talk to people, do your research, and it's not either loan or equity. It is equity, and then even within that, there's a whole range of things. And it's such a complex world to navigate. So the more resources you can get, and the more people you can talk to, entrepreneurs who've raised money, take advantage of some of the things that the AMI guys are putting together. I think that will really help you in your journey. So yeah, just do the work, and it is complex, but it is doable.
Yeah, thank you for that, Brian. And I think the purpose of this conversation is sort of to just spike that conversation and get it started. It's been on a lot of people's minds. So I know we can't handle it in 30, 40 minutes, but at least the awareness is out there. And thank you for making time to bring your wisdom to us. So thank you. Sarah?
Thanks, Brian.
Yeah, so for me, I would say build a warrior instinct. After you've done all your homework, you know where the private equity guys are, and you know whom to start meeting, you will hear a lot of no's. You'll hear a lot of no's. Even Facebook entrepreneurs, Google, they all had no's. And then they found the investor who was the right click, and they were able to get to where they are today. So have a warrior instinct. Focus on execution of your vision. Actually, that's the most important thing, because there have been entrepreneurs who became focused so much on the fundraising that fundraising became now their job, the main job, than actually executing on the business. So execute on the business, continue to meet the entrepreneurs, and you will find the right click eventually. The investor is out there.
Yeah. Thank you for that, Sarah. Wow, time has gone by so fast, and I see your questions are still coming. I see Josephine, you're asking, is there funding available for prototyping? Alex Okello, what is better, equity or loan from an investor? Zhao is asking, is crowdfunding still a viable option? So we still have three more guests that will add and will get to ask your questions. So keep keep them coming. We'll try and answer as many as we can. So I wanted, I don't know where Rebecca disappeared to, my co-host. Where are you? I need you back. So I wanted us to sort of flip the coin now. So we've talked to experts and what they look for in terms of looking for an investee or an entrepreneur to invest on. Now I want us to wear the entrepreneur hat or the investee hat and talk to that perspective. What is it like? How do you approach investors and all that? So to help me have that conversation, I'd like to add back Rebecca so that she can talk about how she was able to raise money two times. And also, let me add, Rebecca, now you're wearing the guest hat. So let me add Brienne van der Walt. He's the CEO of GroFin. So he has over 20 years experience in corporate and business banking, financial services, public sector consultancy. But over and above that, he's an entrepreneur himself. So help me add Brienne.
Hi there. Hi, Naomi. Hi, Rebecca. Thanks for having me on your program. And I always say the best part of my job is when I can speak to entrepreneurs. So I'm really excited to be here.
Thank you so much, Brienne. Maybe you can introduce yourself and GroFin real quick.
Sure, yeah. So I'm the CEO of GroFin. We're an impact financier and provider of business support. We are active in 11 countries in Africa and 3 in the Middle East. We've been going for around 20 years. We have financed and supported around 700 SMEs.
Okay. Thanks. We look forward to hearing more and how you can talk about your experience in terms of raising finance. So I'd like to add our final guest, James Mworia. So he's the executive director and founder of a conglomerate of company that's called Prudential Group. And within that, he's been able to raise investment for some of his companies. So help me welcome James Mworia to just speak about his experience. Hello, James. How are you?
Hi, Naomi. Thank you for having me here. Thank you, AMI. It has been a long journey for fundraising. It's been 15 years of entrepreneurship. During the 15 years, I've been able to have 13 startups, 7 of which have failed, and the surviving ones are 6. And those are the ones that we packaged together to call the Prudential Group. So thank you.
Wow, we look forward to hearing more about your story, James. Maybe we could start real fast with Rebecca. Maybe you can just quickly tell us how were you actually able to raise capital for AMI? How many no's did you get? How was that journey? When did you finally get a yes, and what made you get a yes?
Yeah, I think Sarah said, didn't she? She said, develop a warrior instinct, and that absolutely is what you need. So we raised 2 rounds. I'll be really short, but we raised 2 rounds. One was a seed round. We were building a product, a tech platform, so we needed funding up front. So it was a seed round before we even had revenue. And that honestly was a lot of luck. We met the right people at the right time. And once we met one investor, we were able to then, that gave us a bit of credibility. We were able to bring another on board. And then we took about 4 years, I think, between that. That was what's called convertible debt. So anyone who's interested in this mix between debt and equity, go look up what convertible debt is. And then we spent 4 years building the business. And I think it was Brian, I can't remember who it was, who said, finance isn't a substitute for building a great business. You've got to build the business and prove that you have a viable business. So we spent 4 years doing that. And then on the back of that, we went out and raised equity. There were, I said in the newsletter we sent out this morning, I think there were at least 5 no's for everyone who was just willing to talk. And then of those who were just willing to talk, and then we talked to dozens before we finally found the one who was our match, like Sarah said, the match that you have the chemistry with and you want to bring on board as a partner. But I'd love to hear from the others.
Yeah, James, maybe you could tell us your experience. I feel like we should have a session with you because of just how much experience you have starting and failing in those and being able to raise money. So maybe you can tell us a bit about when were you able to finally raise money, and why were you able to do that? How and why? What made you successful?
I founded my first business when I was still in the university, and obviously our biggest challenge by then was funding, and we went to the local banks, and unfortunately we were not successful. And that is a common story. I think that is a common story to every micro or SMEs out there. And then some 5 years into the game, we were trying to be more ambitious and tried to do a public listing. And we went to apply for a public listing at the Nairobi Security Exchange. Unfortunately, we failed. We didn't succeed on that. Then some 2 years into the game, we started approaching some private debts and private equities, which in the private equity, unfortunately, we didn't get a sweeter. Nobody was willing to talk to us because our ticket was quite small. But fortunately enough, we got some private debts. We got some people to put some debt into our company. That was 7 years into business, which was some good money by then because it was like $1 million or so. And that really boosted us to grow our business to something tangible that the private equity investors would actually consider. So then we got a private equity investor who would put some money into our business as an equity partner. By then we had some 4 startups, and then finally we got the local banks starting to talk to us to see how we can be able to partner with them. So the conversation that we have now are from the local banks. Unfortunately, I thought they should have come earlier in our earlier stage of business, but they are coming in the 15th year of our existence. So I would encourage as Sarah shared and the other shared, I would encourage the entrepreneurs to stay strong. The opportunity is still there. You just need to continue pushing, and one day, one time, you'll get your sweeter. It's a journey.
Yeah.
It's not an event. Fundraising is not an event. It's a journey. Yeah.
Wow, I like that. And it's interesting because a lot of people in the comments keep telling us, I've gone to the bank, I've said no. And here is like a real case study about how he actually started with private equity, then private debt, then went to private equity, then now is when the banks are sort of suiting him, so to speak. Yeah, so thanks for there's still hope. Maybe Brienne, you could share from your wealth of experience. What have you seen that successful entrepreneurs who are able to successfully raise finance, whether debt or equity? What is it that they do? What makes them different? Because it's not something that's different.
Yes, I think raising capital is all about instilling confidence in those people that you approach for money. In fact, the word con man is short for confidence man and refers to someone who uses tricks to cheat people out of money. So usually the money or possessions, and they do this by instilling confidence in people. I'm definitely not advising any entrepreneur to become a con man, but the confidence. Okay, so an entrepreneur must instill confidence if he or she wants to be successful at raising investments, whether debt or equity. Of course, organizations who lend money or invest as part of their business will not just give you money based on big dreams or a story. They will only get enough confidence to lend or invest in you by looking at how you've performed historically, or by testing the concept or idea that you want financed, by testing that very vigorously. So if you want to instill confidence by giving evidence that you've run a business successfully in the past, you'll go through a few steps there. Or if it's a startup, then that concept that you want finance will be really rigorously analyzed by investors. But it's all about creating confidence that you can make a success or continue your success if you have an existing business.
Yeah. Thanks for that. I'll ask just one more question and then we'll go to the audience, because this is about the people listening in. And I know we are all, the audience included, and my guests, you're very busy people, and we did factor in until 1 o'clock. I see we are just at 1 o'clock. So if you could just give me 10 minutes of your time and including the audience, and then we'll wrap up. I hope that's okay.
Certainly.
Yeah, that's okay.
Okay, thank you. So maybe keep your comments and questions coming, guys. But for now, I'll ask, and anyone can actually take this. Why do you think so many entrepreneurs are successfully? So we've talked about the trades and you've talked about your experiences, but what is the thing when you are raising capital that unlocked everything? Other than the confidence and not giving up, all that, what's that thing that sort of just flipped in your mind or in your model or in your business that unlocked everything?
Yeah, so for me, it is when someone can show a track record of success. And I always say that's almost the most difficult part, because it's almost like a catch-22 or a circular reference. In order to show success in working with debt or equity, you need to attract it. So how do you attract it without showing the success? And typically you just have to start small. So all businesses typically start small, either with your own savings or borrowing from family and friends, and then you build up a small track record. Or you have a really novel concept that has huge potential, and where typically then equity investors would test that, test the demand, test the potential, and then say, okay, let's go for it. So it's really between those two.
Yeah. James, do you want to go for that? What's
Yes.
that thing that unlocked for your business?
From my past experience, I learned that the biggest challenge that I had before I was able to do some meaningful fundraising was not being able to do a proper business model of my idea, not being able to document exactly what I mean by my business, and not being able to communicate what is my addressable market size, as in if this business becomes big, what will it become? I was not able to do that. And I think that is most of the things that is one of the things that the upcoming entrepreneurs face. They are not able to properly explain their business model on paper. Who is my customer? What is the target customer segment? What problem am I solving anyway, now that I want to do this business? And what value will I offer to my customers? That is part of the questions that are not able to precisely being answered by the upcoming entrepreneurs, and especially who are looking for funding. They'll just tell you they have a good business, and it's the same thing that I went through. I have a big business, it will grow, it will become, but can I show it? Can I be able to show it on paper? That was what was the biggest challenge. But when I was able to document and come up with the necessary documentation, like an investor's memorandum, just an investor's memorandum, 10, 20 pages kind of a document, like I'm able to explain my business on paper and show where are my revenue streams, what are my costs, what are my potential profits if I'm not booking profits as of today. In the future, what will this business become? When it grows big, it will become what? Those kind of things. And I think if entrepreneurs are able to address the business model as a critical factor, then it will become more easier to convince either private equity or debt or even banks that you have a bankable idea. Yes.
Yeah.
I think that's such a great point, James. Like we often, so at AMI, we run these programs for entrepreneurs, and I'm often struck when people start the program that even entrepreneurs, often with quite big, sophisticated businesses, aren't able always to describe the drivers, the economic drivers in their business. And as much as, I agree with you, if you're going to talk to formal investors, you will need a written business plan. I think even before that, often we see the entrepreneurs falling into the trap of going to get a consultant to write them a business plan. The key for me is that you, as the entrepreneur, own your business model. So you understand what those drivers are. You understand your financials inside out. It doesn't matter if an accountant does them for you, that's fine. But you need to understand how they fit together and how that works to, how that's going to grow in the future. So for me, what's really key is, as much as the business plan is important, I felt like once I really understood my customers, the economic drivers of my business. By economic drivers, I just mean the costs and the revenue, right? Where's money coming in? Where's money going out? I understood the cash cycle. I understood how the business worked. I could see that investors started to take me seriously. And just one more point, if I can add, the other thing is just back to Brienne's point about the con man, is that investors, even if you know your business really well, you need to indicate that to investors. So if you can show, I noticed once we started getting well-known clients and once we already had investors, then suddenly everyone wants to talk to you. So if you've got, even if you're in discussions with a big blue chip client, or anything that you can show that indicates credibility earlier on. So even if it's just you and you're just starting out at your kitchen table and you've got one team member and not much revenue, if you can point to some credibility, something that you've done that shows that you're serious, that has a big impact, I've found, with investors.
Yeah. I'd like to take some questions, and since there are many, I think any one person can answer. Josephine Suleiman is asking, it's quite a technical question, but we'll go ahead and answer. Is there is funding available?
Yes, there is. So prototyping, you can go to accelerator hubs, and many of those would look at prototyping. They don't even have to be in your country. They quite often take applications from regions or from continents, but you get accelerator hubs, you get sector hubs that also look at prototyping. So definitely.
Okay. Yeah. Alex Okello is asking, what is better, equity or loan from an investor? Can we negotiate better terms? So I don't know if someone wants to take that, either Rebecca or James, which is better? If you can answer.
Go ahead, you've done both.
He can try both, but again, it's dependent on the stage of his business. Is he a startup? Is he on growth stage, or is it a mature business? It will depend. And again, what are the needs of the business? Sometimes, not every time that equity works for the business. Not all the times that debt will work for the business. So what is the actual need of the business? What does he want to do? Does he want to invest in a new capital intensive investment? Then equity will make more sense. Is it a working capital challenge? Probably that will assist him, yeah.
Okay. Zhao on Facebook is asking, is crowdfunding a viable option? I think a lot of entrepreneurs, what I'm seeing from the comments, there are a lot of big words and a lot of sort of ideas people get, prototyping, crowdfunding, and what are the viable options? And maybe it could fit to the next question that I will ask from Mercy. So there's all these concepts that entrepreneurs are being exposed to, and Mercy is asking, Mercy JB, what's the biggest mistake to avoid when fundraising? So I'll take that all together. So how are you able to sort of decide, okay, this is the option I'm going, and what do you think? I know you might have answered this before, but what's the biggest mistake? Maybe Rebecca, you could take that, or to avoid when fundraising.
Okay, you want me to go first? Yeah.
Yeah, I think
there's two things I would say. So one is, first of all, someone mentioned it earlier, not to get so caught up in the fundraising that you lose sight of the business. Fundraising is not an end in itself. You should only raise money if you have a good business that you think you can make great, or if you have a great idea that you think you can bring to life. So don't make fundraising your everything. Really keep your eye on the business, grow a great business, tell a great story, and then you'll raise money. Or if you're very early stage, at least build a great idea, start to build traction, and then you'll raise money. The second is to realize how long it takes. So if you're a relatively early stage business and you're raising money in order to have funds to survive, right? So when we were raising money, we raised funding before we were profitable. So we needed that money to keep us afloat. We needed it for cash, right? It can take a year to raise equity funding. Perhaps Brienne does it more quickly at GroFin, I'm not sure, but it took us pretty much a year to raise. So I would say a mistake you make is to start too late. When you really don't raise money when you're desperate for cash. You'll end up getting squeezed. If the investors realize that you really desperately need cash, you're not going to get good terms. You're not going to have a good negotiating position. So raise money before you desperately need it. So that you can take your time, you can find your marriage partner, and you can negotiate the terms that you need.
Yeah, well, time has literally just flown by, so I'm at time. So I guess as your closing remarks and my final question would be, what advice would you give an entrepreneur who's considering to raise capital? So feel free to answer that and say any other thing that sort of your words of wisdom, in as much as so much has been said today. Brienne, would you like to go first?
Yes, I think determine what kind of capital you need, debt or equity, and there's definitely different uses and different life cycles where you apply those. And then really you have to be able to tell your story backed up with facts. So get that credibility, get that confidence, because if you're not going to become credible in front of potential investors, they won't invest in you.
Yeah. Thank you for that, Brienne, and thank you so much for taking the time. James, would you like to give your words of wisdom and what advice for entrepreneurs out there looking to raise investment?
Yeah, I would repeat what Rebecca shared, that fundraising is not a solution to poor business models. So I would urge the entrepreneurs to take their time and look at their business models more deeply, and to concentrate on building bankable businesses. Even if you have no business that is running on the ground, but you can be able to explain your business confidently and show that how the business will grow and how it will generate revenues and how you'll manage costs and how it will be profitable in the future, even if it's not profitable today. So business modeling and taking fundraising as a continuous process. It's not a one-off thing. It's not an event. It's a process. You continually do it as you continue doing the business. And finally, to dare to start. They have to dare to start. However small, but they have to dare to start. Thank you.
Yeah. Thanks, James. And I want to have you back because I think there's so much wisdom in there just by starting and failing and being able to raise all that money and now banks, all that. So I will have you back soon. Thank you for making the time.
We should do a fireside chat with James where we just have him and hear his whole story.
I know. So we just go and have James.
Anytime, Rebecca.
Okay. Thank you, James. Rebecca?
Yeah, I think I've said most of the main points, but just to encourage anybody who is perhaps feeling inspired by today, if you think that you have either a great idea with the beginnings of a concept or a great business already there, and you've got a vision to grow it, and that you think that a funder can walk with you on that journey and help you make it happen. As James said, dare to start. Start by getting your business in order. A quick plug for AMI, but please come, check out what we're offering right now. We've got scholarships for free programs for ambitious businesses. So if you feel like, you want to start out on this journey and you've got big ambition, please come join us and we'll help you get your business in order so that you're ready to start talking to some of these investors. We're always happy to chat about this. We're thinking about developing an offering that's perhaps a little bit more targeted at access to finance. So if you feel that this is speaking to you and you'd like to do more, please do reach out to Naomi and let us know, because we're trying to get some market feedback right now as to whether this is a need that we can help meet. So thank you so much, Naomi. I've loved the conversation. Thanks everyone for tuning in.
Thank you, Rebecca. And I can still see we have so many questions on, and what I could do, I know finance is such a big topic, and I think what has happened is we've provoked more questions than we have answers, and that was the purpose of the conversation. So tell you what, if you have any burning questions, please write to me. My email is naomi@africanmanagers.org. Ashley will put it on the screen. If you have any burning questions, just write to me and I'll be able to sort of connect you to an expert, try and get it answered. And because we are here to support you. If you thrive, we are thriving. If you're successful, we are successful. So thank you, Rebecca, and thanks for taking time. So I'd like to urge and thank all the guests who we had today, most importantly you for joining us. And we have these conversations every Thursday, so feel free to subscribe. If you're watching on YouTube or on Facebook, just click on the notification and we try and address different topics. Write to us, tell us which topics you want us to discuss. But I just want to thank the guests who are able to come and give their expert advice, their sort of experience, and to thank GroFin. You can follow them on social media, Teranga Capital, Creadev International, Novastar Ventures, and James, his conglomerate of companies, his 13 companies, Prudential Group, and we'll have him back soon so that he can tell us his story more. So you can write to the guests on LinkedIn. I've given you my email, write to us. I know there are so many questions out there, so feel free to reach out to us. So you can also go to our website. Rebecca has mentioned, and I had mentioned in the past, we have so many programs. Most of them are free, actually. All you need to do is sort of qualify for them. So go to our website, africamanagers.org/together, and just plug into all the programs we have for different types of entrepreneurs and see what suits you and plug in. And we are here to support you and give you the skills to build a successful business. Yeah. So till next Thursday, thank you for giving me extra time. Please have a fabulous day and weekend ahead. Keep well, keep safe, and till next time, bye.